On April 10, 2025, former President Donald Trump made a move that sent shockwaves through the global economy. He announced a new round of tariffs on Chinese goods, some as high as 125%. This represented a significant escalation of the trade tensions that had been simmering between the world's two largest economies for years. Trump had long accused China of unfair trade practices, currency manipulation, and intellectual property theft. While the efficacy of these tariffs during his presidency remains a subject of debate, their reintroduction in 2025 sent a clear message: the trade war was far from over. The decision to impose these tariffs was met with immediate condemnation from many within the business community. They argued that the tariffs would harm American consumers, who would now have to pay more for goods imported from China. Despite these concerns, Trump pressed ahead with his plan. He believed that the tariffs were necessary to protect American interests, and that China would eventually back down in the face of American economic might. China's response was swift and decisive, and the global economy braced itself for a trade war the likes of which it had never seen. China wasted no time in responding to Trump's tariffs. On April 11, 2025, just one day after Trump's announcement, China announced retaliatory tariffs of its own. These tariffs, also reaching 125%, targeted a range of American goods, from agricultural products to automobiles. The Chinese government accused the United States of protectionism and bullying. In a statement, the Chinese Ministry of Commerce said, "China will not bow to pressure or intimidation." China, unlike the US, had been actively diversifying its trading partners. It had been investing heavily in infrastructure projects around the world, as part of its Belt and Road Initiative. The speed and severity of China's response took many observers by surprise. It was clear that China was prepared to weather a trade war, even if it meant short-term economic pain. This was a new China, confident and assertive on the world stage, no longer willing to be treated as a junior partner in the global trading system. The immediate impact of China's retaliation was felt most acutely on Wall Street. On April 11th, as news of China's retaliatory tariffs spread, the US stock market plunged. An estimated $500 billion was wiped off the value of US stocks in a matter of hours. The Dow Jones Industrial Average, a key indicator of the health of the US stock market, plummeted by over 1,800 points, or roughly 6.5%. The S&P 500, a broader index of 500 large companies listed on US stock exchanges, experienced a similar decline, falling by over 6%. The tech-heavy Nasdaq Composite Index, already sensitive to trade tensions, fared even worse, dropping by over 8%. This dramatic sell-off reflected the deep uncertainty and fear that had gripped investors. The prospect of a full-blown trade war between the US and China, the world's two largest economies, was a frightening one. Investors sought refuge in safe haven assets like gold and government bonds, driving up their prices. The US dollar also took a hit, falling to a three-year low against a basket of major currencies. The shockwaves from the escalating trade war between the US and China were not confined to North America. Across the globe, financial markets shuddered as investors grappled with the potential fallout. From the high rises of Hong Kong to the trading floors of Frankfurt, the mood was one of anxiety and uncertainty. Asian markets were among the hardest hit. The Hang Seng Index in Hong Kong, heavily reliant on Chinese trade, plummeted by a staggering 8.5% in a single day. The Nikkei 225 in Tokyo, another bellwether of Asian economic health, tumbled by a significant 9% over the course of the week. Germany's DAX index, a key barometer of European economic sentiment, opened the week with a near 10% decline. The interconnected nature of the global economy meant that a trade war between the US and China would inevitably have ripple effects across the world. Countries deeply integrated into global supply chains, particularly those reliant on exports to the US or China, braced for economic pain. Beyond the tumultuous world of finance, ordinary Americans were also beginning to feel the effects of the escalating trade war. Consumer sentiment, a key indicator of economic confidence, had plummeted by 30% since December 2024. The trade war had cast a pall over the American economy, fueling anxiety and uncertainty about the future. Concerns about unemployment, a traditional barometer of economic health, were at their highest point since 2009. The specter of job losses, particularly in manufacturing and agriculture, sectors vulnerable to Chinese retaliatory tariffs, loomed large over many American households. Adding to the anxiety was the resurgence of inflation. The Consumer Price Index, a key measure of inflation, had soared to levels not seen since 1981. The trade war, by disrupting supply chains and increasing the cost of imported goods, was contributing to this inflationary pressure. This surge in prices, coupled with stagnant wages, meant that many Americans were seeing their purchasing power erode. The Biden administration, struggling to contain the fallout from the renewed trade war, appeared adrift. While the U.S. grappled with internal anxieties and market turmoil, China was busy executing a long-term strategy to mitigate the impact of the trade war and solidify its global standing. President Xi Jinping, unfazed by U.S. pressure, embarked on a whirlwind diplomatic tour, seeking to strengthen ties with key trading partners and expand China's economic influence. In a display of strategic deftness, Xi met with leaders from Spain, Vietnam, Cambodia, and Malaysia, all countries strategically positioned along China's ambitious Belt and Road Initiative. These meetings, laden with promises of investment and cooperation, underscored China's commitment to forging a new multipolar world order, one less reliant on the United States. Xi's diplomatic offensive extended beyond his personal engagements. Chinese ministers fanned out across the globe, engaging in high-level talks with counterparts from South Africa, Saudi Arabia, and India. These discussions centered on enhancing trade cooperation, exploring new investment opportunities, and reducing reliance on the US dollar in bilateral trade. China's message was clear: the world was no longer beholden to a US-centric economic order. This message resonated with many countries, particularly developing nations wary of US hegemony and eager to benefit from China's economic rise. Paradoxically, the high tariffs imposed by both the US and China had a somewhat muted impact on the actual flow of goods between the two countries. Years of escalating trade tensions had already led to a significant decoupling of the two economies. Businesses, anticipating continued friction, had diversified their supply chains, seeking alternative sources for raw materials, components, and finished products. China, once a manufacturing behemoth feeding the insatiable appetite of American consumers, now accounted for a shrinking share of U.S. imports. Chinese exports to the U.S., once a cornerstone of China's economic miracle, now represented a mere 2% of its GDP. The U.S., for its part, had also seen its trade dependence on China decline. American manufacturers, once reliant on Chinese factories, had shifted production to other low-cost countries such as Vietnam, Bangladesh, and Mexico. This shift, driven by a combination of rising labor costs in China, concerns about intellectual property theft, and the desire for greater supply chain resilience, had been underway for years, accelerated by the trade war. Certain sectors, such as consumer electronics and apparel, remained heavily reliant on Chinese manufacturing. The re-escalation of the US-China trade war had profound geopolitical implications, pushing the world towards a new era of great power competition and fragmentation. The escalating rivalry between the world's two largest economies was reshaping global alliances, forcing countries to choose sides or navigate an increasingly treacherous path of neutrality. The European Union, caught in the crossfire, found itself grappling with its own strategic calculus. On the one hand, the EU shared some of the US's concerns about China's trade practices, its human rights record, and its assertive foreign policy. On the other hand, the EU was wary of being drawn into a full-blown economic conflict with China, a vital trading partner and a major source of investment. The EU, while expressing solidarity with the US, stopped short of imposing its own tariffs on China. Instead, it sought to carve out a middle ground, engaging in dialogue with both sides while simultaneously strengthening its own economic defenses. There were whispers of a potential grand bargain, one that would see the EU removing tariffs on Chinese cars in exchange for China, guaranteeing a minimum price for its exports to Europe. As the dust settled on the initial shockwaves of the renewed trade war, the world looked on with a mixture of trepidation and resignation. The prospect of a protracted economic conflict between the US and China, one with no clear winners, loomed large. The global economy, already grappling with the lingering effects of the pandemic and geopolitical instability, faced an uncertain future. The high tariffs imposed by both sides seemed less about economic pragmatism and more about symbolism, a reflection of the deep distrust and animosity that had come to define the US-China relationship. They were a potent symbol of a world fracturing along geopolitical fault lines, a world where cooperation and compromise were increasingly elusive. Would the US and China find a way to de-escalate the situation, to return to the negotiating table and hammer out a truce? Or would they dig in their heels, their rivalry deepening, their economies decoupling, their worldviews diverging? The answers to these questions would shape the global order for decades to come. The world held its breath, bracing for the next chapter in this high-stakes geopolitical drama.